For U.S. homeowner insurers, there was no escaping the wild weather in 2017. The impacted were far and wide, with 4 of the top 20 writers reporting combined ratios over 120. But a new AM Best report notes that the industry on the whole was able to manage through the catastrophe-heavy year. And with us to discuss this is senior financial analyst Maurice and industry analyst Bobby Skrabal. And Bobby, the combined ratio for the industry well above what it's been in recent years. No real surprises considering the cat events of 2017. But were homeowner writers able to limit the impact of the cat events of 2017?
Right, obviously, all the cat activity that happened, Hurricanes Harvey, Irma, Maria, and the California wildfires. But there are also a number of other major storms, hailstorms and tornadoes across the country, and there was also a severe freeze in the southeast. So basically, homeowners insurers across the country were affected by this, not just the cat areas. And there was also an increase in non-weather water losses as well. So that really drove losses in 2017. They were helped by a number of factors. There's been favorable reinsurance pricing, terms and conditions, and that's really driven by an abundance of capacity right now in the reinsurance market. Traditional reinsurers are very well capitalized, and there's also been inflows of alternative capital that have maintained that favorable pricing for homeowners insurers. There's also been improvements in underwriting analytics that have really helped homeowners insurers with their risk selection in recent years. And these factors are what led to the strong underwriting results prior to this year for the previous 4 years, which was one of the best stretches we've seen over the past quarter century. Not surprisingly, homeowners insurers are well capitalized, and they were able to absorb these losses.
Now, Maurice, the report notes that the market share is becoming less concentrated at the top. What's driving that?
Yeah, over the past decade, we've seen a trend among some of the top homeowners insurance companies that have become more focused on risk selection and concentration. As a result, a number of companies have become more specialized in certain segments of the market, such as cat-exposed areas, high risk, high net worth areas, as well as the renter's insurance. As a result, while what we consider to be the mass market will be available still for the majority of insurance business, we expect this trend of specialization to continue as companies try to differentiate themselves in a more competitive marketplace.
Bobby, where do homeowners writers stand on predictive analytics?
Personal lines insurers have really been pressured recently to improve the homeowners line because of a deterioration in underwriting for a personal auto. They've made significant investments in technology, and they've really been focused on improving their underwriting and pricing tool sets. By peril pricing has become more prevalent in recent years, and this has allowed for insurers that have adopted by peril pricing to improve their loss ratios and increase market share. They've also been able to improve rate adequacy, and by peril pricing has allowed companies to more effectively and efficiently purchase reinsurance. Although implementation costs can be prohibitive for predictive analytics, third-party data has also allowed more companies to adopt this technology. And as companies become more analytically driven, they can become more specific in their pricing. So it's our view that companies that are late to embrace these changes will either be adversely selected against or risk losing market share.
Along the lines of technology, Maurice, how are homeowner writers doing when it comes to interfacing with consumers, especially compared to, say, the auto industry?
Yeah. I'll start off by saying, first and foremost, personal auto companies clearly are on the forefront with regards to leveraging technology through the use of predictive modeling. For homeowners, carriers, pricing, accuracy in pricing is a little more difficult because homeowners' characteristics are less homogeneous in nature. Specifically, naming some examples would be amount of insurance, protection class, age of dwelling, as well as square footage, just to name a few. As a result, homeowners carriers have in recent years started to invest more in utilization of data analytics to improve pricing integrity. greater access to data sources, and more widely accepted or adopted biperil pricing, as Bobby mentioned earlier, and credit scoring, all have in many ways leveraged the playing field within the homeowners marketplace. Companies also have started to leverage technology in other facets of insurance operations, such as claims, data, as well as distribution. As well, the industry technology has helped homeowners insurers help to improve the customer experience through through artificial intelligence, as well as mobile app technologies. As well, through these mobile apps, homes are now being equipped. Essentially, you have smartphones, smart TVs, you now have smart homes. These homes are equipped with smoke detectors and carbon monoxide detectors, as well as security systems, water leak detectors, thermostat controls, and all sorts of technology that you can manage through basically a few taps of your cell phone. These consumer-friendly services are intended to improve the customer experience, as I mentioned it previously, as well as they were designed to essentially help insurance carriers more accurately understand the business, the insurance risk, as well as better price their products.
Maurice, Bobby, thank you so much for taking the time to speak with us today.
Great.
Thanks, John.
Thank you.
You can find the full report online at ambest.com. And for AM Best TV, I'm John Weber.